Good morning, everyone, and welcome to the European crossover webinar. And it's going to be a very, probably slow price action. We do have a holiday here in the States. It's MLK Day, so would not be expecting any big movement. Although we are seeing gold pair back a little bit further. You can see here, and I believe on our analysis that was going to come in for our initial support, but we'll go on and get to that. Be one moment. I'm just going to take a look at something real quickly. Now, we did get German PPI earlier today, and that's still, retracting here. And one of the concerns here, and we are going to cover that because it's going to be, in a sense, at least for today, obviously very light. But the focus will be we'll take a look at some information on the ECB. I know on Blake's week ahead video, that was one of the key areas that he was pointing about. But you can see here, that's pretty much it after this German PPI data. Well, let's go and move this out of the way. And let's just go and quickly take a look at the morning bid just to get an idea for the news, and then we'll kind of capture the overall news from before. Let's see if we can pull. And like I said, it's going to be a very, very light morning. Just kind of do an overview for the week's analysis. Okay, was it then some local media reporting that Theresa May's effort to push cross-party talks for a Brexit consensus are pretty much dead in the water only a few days after the proposal? If true, that would be due in part to her refusal to budge on the red lines and in part Labour leader Jeremy Corbyn's demand that no Brexit be taken off the table before he takes part. That would suggest the only game in town remains May's drive to persuade the hardline Brexiters in her own party and the Northern Irish DUP that her deal isn't that bad after all. Speculation grew at the weekend about the moves that would replace the Irish border backstop with some kind of a UK-Irish treaty, but Dublin has quickly dismissed such talk. This then is the upcoming background border backstop with some kind of a UK. Hang on one second. Okay, and in regards to the UK treaty, but Dublin has quickly dismissed that. This is the unpromising background against May will present a plan B this afternoon, ready for a vote on next Tuesday. Perhaps just as significant are the two amendments which may get introduced, one that would seek to preclude a no-deal Brexit via generous extension of Article 50, the other allowing Parliament to hold a series of non-binding votes to whether any compromise at all supports the majority of suspicious Brexiters to see an ambush attempt by Remainers. Obviously, this is going to continue to be the main focus, especially on a quiet day like this, no activity here in the States. The bread and butter business of the European Union, meanwhile, goes on as usual. Two ministerial meetings in Brussels today. National foreign ministers must decide how strongly to raise their concerns about DPR's Congo. Well, we don't want to spend too much time there. Markets, let's go quickly. Although full year 2018 GDP growth in China was the slowest since 1990, the 6.4% annual rate of the fourth quarter expansion itself, a near 10-year low, was in line with forecasts. In December, industrial and retail figures were slightly ahead of expectations. So while there's little goes on the absolute numbers, they have at least assuaged some of the fears from December trade figures of a cliff edge activity in the final months of the year. There's also heightened speculation of further policy stimulus. We talked about that for a while. It was almost getting some kind of a stimulus every day to offset the slowdown. So despite weekend denials of Friday's reports of a U.S. plan to reverse its tariffs on China, the market mood remains upbeat. Shanghai and Hong Kong stocks were both up 0.5%, with Tokyo and Seoul just in the black too. China's offshore yuan was steady near Friday's close, and Australian dollar was also little change. Emerging markets such as the Indonesian rupiah and South Korean won and Turkey's lira were weaker. U.S. markets are closed on Monday for Martin Luther King Day, and trading volumes will be sapped around the world as a result. Euro dollar was firmer against the dollar despite a sub-forecast German producer price report for December, and as traders eye this week's ECB meeting and stepped up European earnings season, European stock futures were down 0.3%. First thing, sterling backed off further from last week's two-month highs as UK PMA is expected to deliver the plan B on how to proceed with Brexit after a withdrawal agreement with the European Union was heavily defeated in Parliament last Tuesday. So, as I mentioned, let's go and take a look. We're starting to see the cable continue to pull back a little bit. Euro is a little bit stronger here. We've gone and pulled back. We had some support. I noted in the chat room last Friday some support there, a good level at that 1351. I think that also coincided with the 61%, but we'll get to that. Before we jump to that, we'll just cover a quick bit of news, and then we'll move right into the analysis. And it's very, very light anyway. And the Canadian dollar is really just a wrap up of Friday. As it says, oil prices moved higher after Bloomberg reports that China sought to raise its annual goods import from the U.S. by a combined value of more than $1 trillion in order to reduce its trade surplus by 2024. Chances of a Canada interest rate hike by April climbed to 25%, less than the 20% from the day before. And increased chances of an interest rate hike over the coming months came as data showed that Canada's annual inflation rate climbed in December, matching the Bank of Canada's 2% target. And on to the Australian dollar. The Australian dollar barely moved on Monday as China's economic growth data came in line with expectations, while its New Zealand cousin drifted to two-week lows. The Australian dollar, a liquid proxy for the Chinese yuan, was last at 71.66. Last week, the Aussie ended down 0.7 as growing signs of weakness in China, which has generated a third of global growth in the past decade. China's slowdown is not news, Craig James said. It's a case. Watch the space for signs how China's stimulus efforts are supporting economic growth. And really, this has been the case for the most part. You know, you're thinking, well, God, if the Aussie's a proxy, you would think this thing would be falling apart with, the continued drift in economic activity, if not drift, but much lower here with China. But this is what it's focused on, this stimulus. It's okay, well, the stimulus is around the road. So it's like Blake used to say, it's like with the donkey and the carrot, and it just keeps reaching for that carrot that, daily or every other daily economic stimulus notice from China. Analysts are watching New Zealand's inflation data due on Wednesday, which looks to have cooled at the end of last year. CPI will be important for the Kiwi this week, said Rodrigo Cottrell. New Zealand CPI also tends to be regarded as a good guide for the Australian CPI due to release the following week, Cottrell added. Confirmation of soft inflation readings for both New Zealand and Australia will raise questions of what to expect from central bank meetings in February and our potential downward force for both antipodian currencies. And the dollar, after firm Chinese growth hits a 20-year low, the dollar held near a two-week high on Monday, shrugging off concerns about weakening global growth and data showing China's economy slowed sharply in 2018. The greenback enjoyed its first weekly gain since mid-December, buoyed by hopes for a thaw in U.S.-China trade tensions. The dollar index, which measures its strength against a group of 6 other major currencies, was steady at 96.30. The dollar is currently benefited from its role as a safe currency haven, said Esther Maria Reichelt. The U.S.-China trade friction has put pressure on China's economy, with the latest data showing the world's second biggest economy slowing further in the last quarter. PMA will wait on Monday to put forward a motion of a proposed next steps over the following week. Lawmakers will be able to propose alternatives. This will debate these plans on January 29th, and voting them should indicate whether they could get majority support. And also the last part will be here with gold. Gold prices held steady on Monday, but we actually seen a dip. We saw in the XAU at 1279. Dovish signals from the Fed have kept strength in check, helping gold. But on the other hand, we've seen easing bearish sentiments in equity markets. We've seen very positive conditions in U.S. equities, and the dollar is also seeing a series of positive trades. All these compelling influences have capped the safe haven appeal for gold that was facing strong technical resistance at the $1,300 level. Asian markets were steady on Monday, and on the longer one, we're still very positive on gold and a synchronized slowdown in global economic conditions and global uncertainty. China's economy slowed at the end of last week, underlining the urgent need for more stimulus as Beijing wrestles with the United States over trade. And the last thing we want to touch on, this might be a relatively shorter webinar because of the lack of price and news, but here's an interesting article I just want to share with y'all as we look out, because it's going to be key for the week, which is the 5 questions of the ECB. The European Central Bank holds its first meeting of the year on Thursday as concerns grow about weak economic growth at home and the risks abroad from the global trade tensions at Brexit. Now, there's a couple of ECB hawks, if you want to call it that are still I think it was Lautenschlager, that she was saying, I'm still looking for a hike. I'll have to wait until I see more data. If I see data continue to wind down, I don't know what she's, I guess doesn't want to, give up her previous stance. But she said, well, if we see data continued week in March, on the March reading, she goes, then at that point she would consider revising her outlook. But she says she still sees another rate hike. So let's see where we are now. Having ended its stimulus scheme in December, ECB Chief Mario Draghi is likely to be pressed in how the central bank will address further economic weakness. Here are some of the questions on the radar at the market for the markets. Will the ECB change its assessment of the risk facing the economy? String of disappointing data, notably from powerhouse economy Germany, suggests a slowing of growth momentum is perhaps deeper than anticipated. We saw that reflected in today's data. Draghi said last week the slowdown could last longer than expected and the economy still needed support, but he added that the bloc was not headed for a recession. In December, the ECB tweaked its statement to reflect increased economic worries, but kept a reference to balanced risk. Economists expect the wording to remain in place this week, and added that a shift to say the balance of risk to growth points down is more likely in March, when the next set of economic forecasts are due. And what I was referencing that Lautenschlager had pointed out, while some argue the balance of the risk assessment could be downgraded, if this was done, markets would look for a policy response and none will come. So the argument against changing the assessments is to keep expectations muted. What about the guidance that rates will stay on hold through the summer? Could that change? No immediate change is expected this week, but the rate guidance clearly in focus given weak data and concern about the impact of developments outside the bloc, such as Chinese slowdown and Brexit. A government shutdown could also hurt the U.S. economy, adding to global worries. Since the ECB last met, the markets have released the rates outlook for major central banks. Bets on U.S. rate hikes this year have been priced out. Eurozone money market pricing suggests investors do not expect the ECB to lift rates until well into 2020. In December, a 10 basis points hike this year was anticipated. Economists also shifted their views. ABN AMRO believes the ECB will signal that rates will be left on hold through 2019 by the June meeting. HSBC does not expect any changes on the ECB's deposit rate until 2020. When does the ECB expect inflation to move higher? Easing inflation complicates the ECB's rate hike plan. Inflation in the bloc eased more expected in December to 1.6%, moving away from the ECB's just under 2% target. Some comfort for the ECB, and perhaps something Draghi may focus on if questioned about inflation, is the pickup in underlying price pressures as wage growth increases. A dip in Eurozone inflation and growth was anticipated, so it's not enough to unravel expectations of a rate hike. Sabine Lautenschlager, the most prominent hawk, said in an interview last week, and as I mentioned, she said she's not until they get the March figures is she going to back away from an expected rate hike, which I think is from, well, maybe not from day to day, but from week to week as we get more economic data. Seems pretty silly of that, stance that she's taken. As the data has weak data, encouraged the ECB to start discussing new multi-year loans to banks. Minutes from the ECB last meeting showed policymakers are likely to debate new multi-year loans to banks, a potential stimulus tool in coming months as they navigate a fragile and fluid global context. Investors are keen for details on a new set of loans banks may look like. That means a question on new bank loans may come up at the press conference even if analysts say it's still early days of the ECB to give any details. The multi-year loans inject liquidity into the financial system by giving incentives to commercial banks to lend to companies and consumers. The previous 4-year TLTROs expire in mid-2020, and lenders will need to start deciding about a year before their maturity and how to replace them. Is the ECB prepared for a no-deal Brexit? Britain's March 29 deadline for leaving the European Union is fast approaching, but PMA's exit has just suffered a resounding defeat. While a high degree of uncertainty remains, concerns about the UK leaving the EU without a deal have eased. Risk reversals in the British pound suggest currency markets are less worried about the prospect of a no-deal Brexit, while the popular market gauge, which shows the ratio of calls to puts on a particular currency, still highlights caution and has recovered from the extreme bearishness on the pound in November. The financial sector is prepared to cope with any fallout from a no-deal Brexit, Francois Villeroy said last week. Draghi may be asked about the ECB would do in the event of a no deal, said Frederic Ducreuset, a strategist at Pictet Wealth Management in Geneva. The path of least resistance would be to use the forward guidance to hike the rates this year at the minimum. So with that, let's go and move on to the analysis for the week. We spent a little bit of extra time because the ECB, that is going to be an important focus for the week, and price activity was very, very slight. We'll take a look at the euro, and our analysis is starting out. The euro's closed below weekly support at 13.69. So that 13.69 is going to be key, although to start the week, you probably thought, well, we probably won't even be at 13.69. We're a little bit higher right now. Along with the break of the daily upward trend, the next level of support is 12.99, confluence at 12.91, which is a 78%. I think that's actually a number that I believe Amanda was looking at. Actually, well over a week ago, or she had mentioned as we were moving down lower, and I think her target is still for a lower euro. Initial 2-hour support is at 13.40.50. We had mentioned that at the 13.51 on Friday. A daily close above 14.22 would be required to neutralize the downside momentum. So let's take a look where we are here. So looking here at the euro, and I'm not much of a trend line guy. Just pretty much to go with the levels, and then I try and confluence some fibs along with that. And I look closely with the candlestick. And generally, I'm looking for body closes. See if I can see something being determined if we break beyond a 50%, or once again, like a dark cloud cover. So anyway, looking on this, but we can see here that we did have a little bit of a nice little trend line coming across. And I put my trend lines across the bodies. For those that don't know, I don't put them across here at the bottom of the wicks, because my thinking is this is where the volume comes in at. So you can see that we did go in and break. So, we'd broken here and opened the door for us potentially to move lower. So where's going to be the upside resistance? Well, we mentioned here it would take a move. If you look at this, if you look at all these closes, and you look here, the dip here, the high here, the dip here, up in here, this 14.22 is huge. And it's going to take a daily close above 14.22 if we were to negate the downward momentum. That doesn't mean that we go bullish. It just means that it would call into question, okay, I think we're overdone, but it wouldn't flip it into bullish mode. So when we look on our bias chart, we're gonna look at our intraday, but 14.22, we put the asterisk there because that means it's going to be daily key resistance, and you can clearly see that here. So that we're still a ways away from that, but going forward, looking out, that would be the key right there, and it remains to be key. And you can see how the market has vacillated around this 14.22, whether it's on the upside, or coming back down, and at this time back up to resistance. Now we'll take a look at the 2-hour chart. The market continues to reign this downside momentum that we see here. Now with the exponential moving averages, I primarily just use those for 30 minutes. But you can see that it does kind of set the tone here. Even though we tried to rally back, we've even gotten above the, just barely above the slower exponential moving average, but it doesn't make any difference. The lower is below this slower moving average, so the sell signal continues to remain. So even when they popped up, they turned around and rolled right back. So the momentum continues to be lower. When we look here on the 2-hour chart, we mentioned about the significance of the 1422 on the daily. The 1426, you can see that here coming across the 2 hours. So basically, they're almost one and the same. I don't know if we want to make any real difference here. On the 2 hour, just right there, it's going to be 1405. So we'll just use that right now as our intraday resistance, but it's going to be 1422 on the daily, right there at 1405. And as far as support, we talked about this area here last week, the 1350. And we're talking about, when the analysis, we talked about this little range here between 40 and 50. And we're going to go right there with 1341 for support. And that's just, and once again, when we look at these support levels, on the bias chart, obviously we put the 1422 with an asterisk, which is going to be a key daily close, or a closing support, or T daily resistance. So we don't always put those there, but when we look on here, the bias chart is essentially for the next 24 hours. It's encompasses today rolling into tomorrow. Doesn't mean we can't push, in this case, lower. Certainly the trend, we're looking for this potentially to go down to dip as low as 1297. Well, 1297, 1291 is our key area of support here for the week. And then we adjust on the bias chart. For right now, though, support on the intraday basis is going to be, we'll put it for 1341. And you can see that it comes in right here. As the momentum comes back, you can see if you're interested, or you use moving averages. I prefer the exponential moving average because it puts more weight on the recent data. But you can see where some people use they'll sell against a rally against the moving average. Okay, and you see the market kind of dip and run out of gas. Well, like I said, it's going to be very light activity today, but you can see the momentum still continues to remain on the downside. So any pushback up here, the markets are keen to step in and sell it. Let's go on and move on to the cable now. We've had some new members come in. I had a gentleman that was asking me yesterday in the Asian session some questions. So I did want to, hit on how we use the bias chart, some of the technicals I'm looking at on a very, very short-term basis. But let's go on and move on right now to the cable here. And I always put my analysis here in just basic technical. So it says Friday's daily body engulfed the prior day's body. And as I told you, I like to go with the body. The body is more important to me than and some people will not consider an engulf unless it encompass the entire wick. And to me, it's all about the body. That's where the volume is. Weekly candlesticks is a long-legged doji. Bulls remain in control with the upside resistance at 30.38. Daily support comes in at 28.20, followed by 27.98. A daily close below 27.45 would neutralize the bullish momentum. So let's go and move into the charts now. One of the things I mentioned here was, if you take a look at it here, now this is what I meant, is engulfed the prior body, which opened the door for this move lower. But also take a look at this on the weekly. We had a long-legged doji. Generally what this means is, if you look at this wick, pretty long wick. We finish in the middle. Bulls don't have control because we finished down here. Bears don't have control because we finished down here. So generally what that means is a pause. And what it does is it opens the door for us. What has been the prevailing direction? Well, the prevailing direction has been up. So generally you get a pause to move lower here. And when we look at this, let's go move into the daily. And it means a pause to move lower on a shorter term basis. So we're seeing just that when we come into the analysis here. Bulls remain in control with the upside resistance at 38. Daily support comes in at 28.20, followed by 27.98. So here we're looking at the 28.20 here. And when I say the daily support, we're coming across the bodies. You see that? So you can see how important it is, the bodies themselves. Yes, the wicks are important, but you'll see that my resistance levels, my levels of support or resistance are generally going to go in and come through the bodies. The only time I generally use the wicks is when, if I'm, let's say you're scalping or after a key major report. Let's say if it was NFP, ECB, you may be looking at a 5-minute chart. Then I'm going to put those immediate levels again, above, the high and the low. If I'm looking at a 5-minute chart or whatever the case may be. But for the most part, I put those through the bodies because that's where, and if you look at it, you see right here, 29.87 here, same thing through this body closes right here. And we ended up slowing down the market, although we came up here to tag the 130. That being said, daily close support comes in at 28.20. And we'll take a look here on the 2-hour. We can see the momentum is pared back a bit. Let's see if we can't get a confluence on the fibs. Well, we can see here that, let's close this off. On the daily, the 28.53 is a 23%, and we mentioned 27.98. Let's see if we can get and this is all the way back from the move from 23.75. Let's see if we can't get something on the most recent downturn from here. So this most recent move, 28.34 is going to be the 50%. I like that area right there. And then 27.95 is a 61%. But also remember, we referenced here that the next available support level here is 27.98. So on a very short-term basis, there we go. On a very short-term basis, we're going to go right there with 28.34. I'll tell you what, just right here, just below that 50%, we'll call it right there. You see where these little bodies are? We'll call it 28.23, coming right across, 28.23. And you can see here 28.34 is going to be the 50%. There we go, 28.23. And on the upside, let's take a look at that. Once we're going to be right there, you can see this level coming right across here. And there's that key 28.88. That'll be our resistance here for today. 28.88. Let's go and move into the Aussie. One of the things I looked at, I was pointing out, I did post that in the room. It does appear, not in the room, but I mean on the analysis, appears we're getting a rounding top here. But certainly this Aussie is holding up like a rock. I mean, they're just hanging their hat on that. More Chinese stimulus coming, more Chinese stimulus, regardless of whatever the reality of the situation would be. You know, it's just that that's what their fix is right now. More Chinese stimulus coming. Hey guys, so let's go and move into the Aussie dollar. After a remarkable recovery from the flash crash, the Aussie remains bullish with daily support at 71.05, confluencing at 71.20. Upside resistance remains formidable at 72.33 with a target of 72.76, which is a 38%. 2 hour appears to be forming a rounding top. So let's go and move on to that. So as I mentioned here, if you look at it, it appears to be forming a rounding top. We'll see what happens. And the reason I point that out is because it's not very often you see a rounding top, although it is starting to carry a little bit further. I think probably would like to have seen this already resolved from here. But this is okay. But if we can start to move lower, we may start to see a little bit more follow through. We'll see what transpires over the next day or so. We're going to move into the daily, though. And looking at the daily, we said we have our support here at 71.05. Confluence, it was 71.23, which is the 23% of this entire move from the flash crash lows of 67.46 up here to 72.35. Resistance is at 72.33, and I mentioned it as formidable because it certainly looks that way. You can see that coming across here. So although when you look at it here, the momentum is definitely still on the upside. So I think, you know, they'll be supported. But once again, this whole Chinese tariff thing, we're probably just only a headline away from things starting to get back, you know, get a little bit ominous. But for right now, it's holding up very well, although it's paring back, but it's still holding up. We're going to go with, let's take a look here on the 2 hour chart. Let's see if we get a bit closer support intraday. Yeah, that intraday support is going to come in right there, 71.20. So if you've been playing from the bearish side, you're looking at this rounding top, and you're looking for very short-term resistance. That would come in at 71.20. And upside resistance is going to be right there. Coming right across, 71.92. Still good 40 pips away, but things are starting to shift a little bit lower here, but it's going to be 71.92 for the Aussie. Let's go move into the Kiwi. Gently moving lower. We do have some inflation data out this week. Obviously, you can see this, the resistance coming in right across these touches here. We're starting to flip as momentum starting to gather a little bit more. We can see here that this is going to be, let's take a look on the daily. You know, when you think about it, 66.84, we're not that far away from here. Let's see if, let's take a look at this on a 2 hour chart. We're holding right here. Support's going to come in, and I like to go right here, coming right across, even just a dip below this area here, where you see more volume coming in, and that's going to be 67.01 for our support. And what I'm doing is I'm just coming across to trying to get as many touches here across the body here. And I look right here coming here. You see this top? This is where the market came back to test against that body top. But I just want to lower that just a little bit lower to allow for some additional movement, which, as I mentioned here, going to come in right there at the 6701 using this body top right there also. Now resistance. Resistance will come in right there at 67.70. A decent amount away, but like I said, we want to give it some room because we've already had a decent little pullback here. So it's going to be 67.70 for the Kiwi. And we have started to turn into, let's call it, we're still within this range. We'd have to actually get a sustained close below this to say, okay, now we're bearish because it's had a decent, okay rebound here. On a very, very short-term basis, I guess we could note it as bearish, but it's still, I think we'd have to see a sustained close here and say, well, it's back to bearish now. Let's go on and move in now to the dollar CAD. Well, the dollar CAD remains firmly in the bear's hands with a close above 33.49 needed to neutralize the downside momentum. Support comes in at 31.52 with confluence with 31.20, which is a 61%. So let's take a look here with the dollar CAD. And although we're steadying ourselves, we just can't seem to bounce higher. Well, that might be in part because look at this huge move back in crude oil. I mean, it's really come back quite a ways. Now, we were looking at the story that had mentioned that China was considering pulling in, $1 billion worth of, over time of U.S. products. And there were suggestions that a lot of that's going to lead into oil. So that's certainly been a supportive factor. And we've seen that rally here in oil. Just, boy, what a move off of what was some pretty desperate lows. So that's kept the dollar CAD itself in these lows here. But as I mentioned before, it would take a move above 13.49 to neutralize it. Now, I wouldn't turn it bullish by no stretch of the imagination, but only thing it would do is it would question if we've already come too far, and then the market would then be looking to flip up and say, okay, how much further can we get and where we get to for selling opportunities? So it doesn't change the perception, it just merely would neutralize it for right now. Right now, as I mentioned, the bears are firmly in control. You can see on this momentum here, and they would be looking to try and sell anything up here towards 33, 40-ish. Once again, what I'm saying is we need to get above that. So where are we on a short-term basis? Let's take a look at that. I move into the 2-hour chart. Well, that 33.14 has really held up well, and you can see we'd come across on these touches, and the market on one run it made up to think it was 23, and then it faltered again. So here we are pushing again back where we were before. So on a short-term basis, it's going to be 33.14. I think that's been our daily resistance, or has been our resistance off and on for quite a bit of time. You can see that 33.14. Where's support going to be? Well, it's going to come across these touches right here. And that'll come in right there at 32.40, which I think is right where we're at. So essentially, no change here for the dollar CAD. It's kind of been that way for the last 3 trading days. So with that, let's go on and move into the dollar Swissing. Well, the dollar Swiss has really come on quite strong. Let's take a look at what we are as far as a Fibonacci. And we're actually right up here at 61%. We're solid there. Look at that. The 61% is at 97.14. And you can see this thing, it's so bullish, it might try and push some additional stops. Now, what I like to do is you want to use, sometimes I'll use that as an area to step in or go against or lean off, but quite often is, you want to use the fibs as confluence with another level. It just gives you additional confidence. So quite often I found when I come in and just try and sell the actual resistance, the actual level of the fib, that may not work out. The market probably has a little bit more momentum, and you can certainly see here that the Swissie has had just that. And so what they're doing is they're looking for targets. How much further can they push? So when I look in here, to me, when I look at the body touches right here, I'm looking right there, which is 98.84. That's not that far away. There's only additional 13 pips. So let's go on and move this out of the way. Actually coming in at 99.89, got a little level right in here, which is just a little bit further. This whole area, I mean, here's the last run up in here where they ran out of gas, which is 99.78. We already have the 61% just below there. Could they push all the way up here? Well, we're already at the 61%. Certainly the momentum's going the way. You know what? I prefer to come right there with these touches. You see that right there? Let's go with that, which is going to be 99.78. So we're just almost there. Let's go with 99.78. But this whole area between 99.78 to 99.80, let's see, 88. It's a bit of a stretch there. Let's go with that 99.88. There. There we go. And then we've got the confluence here with the 61%. So we will satisfy or resolve ourselves to 99.88. And when we're looking for support, support's going to come in right there. That's also confluence in here with these body touches. And that's going to be quite a ways down, though. It's going to be 99.02. Might be a little bit too far away. Boy, what a meteoric move on here. Right there, you can see this little hesitation right in here. So we'll go right there, which is going to be 99.23. So if we do pair back from there, this give you a decent little area on a short-term basis to look at, was where the market took a pause. Right there, 99.23 on a very short-term basis. If we were to pair back, you'd probably see a little bit of a bounce from there. Going further back, we'll probably make it down here to the 99 even. But on a short-term basis, 99.23. And let's go into the dollar yen. So it says the JPY broke above the 50% fib and now is on its way to the next objective, which is a 61% at 1077. Well, that was, let's see, the rebound higher still can prove, that was, let me see, on the basic technical. Okay, let me take a look in here. The USD broke above the 50% fib and now is on its way to the next objective, which is a 61% at the 1077. The rebound higher can still prove to be corrective as long as we don't break above the 1150, but we need to assess the price action during the next few days before making a determination. Now, I don't think, for whatever reason, my data didn't take hold here because I did mention the same thing here. Let's go back in here. And what I was looking at, for whatever reason, my analysis didn't save there because I'm with the Asian update. My thought was here is that we did get above the 927, which is the bias pivot. Okay, right here. And we also got above this 957. Now, my thoughts were, and I'd actually got stopped out when we moved up in here, gave it some extra room, and I was really frustrated with myself. But you know what? Those things happen in the market. I mean, I thought it was a good risk reward, and the S&P was really well overdone. But then that headline came out, which pushed things higher, and then it pushed it even further on Friday as the S&P at the time continued to move higher. And we got above this 957. I said, I don't want to take any chances. Maybe somehow a deal gets done or something. Then this thing really pushes higher. The next key area here is right here at 1034. And then we're looking, on this daily. And really, I think it was 1040 if you look at it on a weekly to push a little bit higher. The only thing I can look at right now is I'm thinking, and I'm looking at, I think it was a 2 hour, I think around 995. I'm not sure whose analysis that was, but that was pretty good analysis. That you probably have to wait because this thing's still acting like it wants to move higher. But I have to think this S&P has come so far, and I'm surprised it made it that high, but high it did. So I want to take a look at where we stand here on a 2 hour chart. This is one of the few times here. You see this wick there? That I would use, and that comes in. Well, actually, that's where they ran out of gas, 983. So I was using that wick. Right here. $10.02, and that's just a level. I think I'm not sure whose analysis that was pretty good thought there, which was let's wait and see. And I think that's what you have to do because anybody who is knocked out, same thing, people waiting, and for as long as you're bullish, you've been bullish, and you're being paid. We're not seeing a reversal, and they can make one more move. So I tell you what, we'll put our resistance at 1002, trying to give it some room. I don't think we're going to get there. Initially, it's going to be 983 for right now, but maybe we make one more splash above there. It is currently right now 983, but let's give it that extra room, which would be 1002. And support, well, it's pretty obvious where support comes in, which is the bias pivot, which is not, let me get rid of this. Which comes in at 927. That's support. Let's go move into the cash dollar. So the dollar index has broken the daily trend line to the upside with the next challenge 96.72, confluence with 98.68, which is a 61%. For now, daily momentum remains bearish. A daily close below 95.94 would negate the upside breakout. So let's take a look and probably think, what do you mean it remains bearish? It just broke above it. Well, what I'm talking about is the momentum here in the exponential moving average. So as long as the green line, see, this is a faster. I use a 9. And 27, when the gentleman was asking me yesterday. And like I said, we've had some new subscribers, so I just want to point out what I look at. And most of my work, like I said, is very, very short term. I pretty much scalp whenever I deviate from that, which I did with the yen. I kind of get myself into trouble. Although I thought the yen was a good risk reward, in a sense, I thought it was very overdone, but obviously we got even further overdone. But pretty much I use just the 5-minute and 30-minute. And so I just jump around a lot. But that being said, when we look here, we did break above this trend line. There's no denying that. And remember, we kept hanging our head on that 96.08. You can see it right there. Remember here, right here. I've been talking about that 96.08 since I think it was Wednesday, and it lingered on to Thursday, then to Friday. And so the market would vacillate with this 96.08 to get a little bit above it, to come back below, to get a little bit above it. I remember even here being the 96. I think this one I was scalping around with the yen. Before I ended up putting a position on again and then keeping it to my own detriment. But anyway, that being said, we got above this 96.08. We broke above this trend, but you can see here on a daily momentum, you can see this all over the place. It still remains in a sell mode. So until we cross above, the momentum is still bearish, but we've broken above a trend line. So that's key. You're breaking above that trend line. We're still trying to go on and move higher at this point. Let me take a look at something real quickly. So the next target is going to be here, this 96.72, okay? And that's confluence with 96.68. So we'll see if we see anything on the 2-hour chart. Here's what we were using it previously as a bias pivot. It'll move up just a little bit higher here, which is going to be 96.51. Let's move this out of the way. So for today right now, that's going to be our resistance, 96.51. See that coming right across. The next overall target, though, as I said, is 96.72, but probably see a little bit of a pause there. Quiet trading. Support comes in. Well, there's that pivot we were talking about on a short-term basis. That 96.08, that's going to be our bias chart support. And let's go move into the gold market. Gold weekly up closes have been broken with Friday's close, and that was one of the things. Remember, we've been hanging our hat on for the last few weeks. We're saying, hey, on a weekly chart, it just kept moving higher and higher and higher. And anyone that was long, they were saying, you know what, just wake me up when we get a daily close. It's a weekly close that's below the last weekly close. So it says gold weekly closes, weekly up closes has been broken with Friday's close, corresponding with the DXY upside break. We saw that. Gold has maintained upside momentum with a potential move up to 1300, but the initial 2-hour support is 1279 followed by 1272. Upside resistance is 1288 if the dollar begins to waver. So when we look at gold, we can certainly see it on the defensive. We did put our support here. Coming in here at, we saw it right there, 1279 followed by 1272. So we're looking at the 2-hour chart. 1267 is that big pivot that we talked about. And we figured that we would see some additional follow-up there because we're going to hit some stops. Anybody that might be long from up in here, they get taken out. We have our support here at 1279. We're just below that 1279. We'll move on to the 2-hour chart because that's what we're looking at for our levels of support. Here's that 1279 I'm talking about with huge support at 1272. Well, the dollar is still pushing a little bit higher. So on a very short-term basis for today, right there, you see that? 1277. So it's going to be 1277 for now. Definitely still bullish. And as I mentioned, resistance was going to be for 1288. Well, we're going to have to lower that a little bit. 1288 is a good resistance. You can see that the touch is coming across here, this body. But in light of the momentum, that'd be a good $10 move up higher. So we're not looking for that. Resistance will come in right there at 1285 for today. Definitely still bullish. But you can see here the momentum has certainly shifted lower. Let's go into the 30-year bond. So we're going to go to 38% right there, 4404. That's going to be our support. There's some additional support if you look here. 44.14. Now, markets are closed. Cash bonds are going to be closed. We'll go 4404. If the S&P started out a little bit stronger on Tuesday. Upside. It's going to be 44.29. And let's go move into the bonds. Upside momentum, although we might be still relatively tight, but we did get that weaker German data, but we'll go up to 63.99. Remember, 64.10 is that huge area, but we'll go with 63.99. And support on a short-term basis is going to keep it very, very simple. Let's go right there, which is going to be 63. I should move it just right here, right there, 63.70. So relatively tight range here for the bond that we have for our support. And let's take a look at the DAX. Finally starting to pare back just a little bit. Resistance is going to come in right there at 11,195. We're going to take the support right here, which is going to be 11,113. Not that far away, not that far away at all. And you can see the dollar index still pushing higher, year dollar. Pretty close. Back up here is 1372, a little bit of a mixed bag. That concludes the European crossover webinar, and I'll get this posted in the room. And thanks for joining us here on MLK Day.